It seems that we go into the last trading session before the Christmas break with a positive feel to the equity market open and even the small chance, say 20%, 25%, that the local market tests 6100. 160-100 in sight for ASX. Hitting 60-100 is a big if, and while Aussie SPI futures are trading 0.3% higher, or 20 points, at 60.34, the market has been reluctant to push the futures index through 60.45, and for those who watch the ASX 200 cash, we will need to see a break of this supply zone if the ASX 200 is to test the figure. If we focus on the moves in the ASX 200 yesterday, granted we had an extended auction with the full unwind of the index did not eventuate until 10:20 AEDT, but after the market had priced all known news we saw the index trade in a tight range of 60.67 to 60.58. And that is with Aussie financials tailing off and doing their best to derail sentiment to Wall Street. So our call for the ASX 200 currently sits at 60.82, and judging by the fact BHP's ADR is up 1.4% and CBA is up 0.4%, we can see that we have a fairly strong guide for two sectors that alone account for 53% for the index weight. We can then search within the S&P 500 and see energy flying high, with the S&P 500 energy sector putting on 2.2%, while financials and materials have gained 1.1% and 0.5% respectively. In fact, while we have seen the S&P 500 come off its highs of 29.93, we can still a 0.4% gain for the S&P 500, with 63% of stocks higher on the day amid volumes some 10% below the 30-day average. One also suspects if we are going to find a further 18 points to take us to 60-100, it will have to be a byproduct of poor volumes and less liquid conditions that give exaggerated moves to any buy orders. 3. Overachieving 2017, a positive day seems in store then, and it feels as though the ASX 200 will close out 2017 with a gain of around 7%, which is above the consensus estimates at the start of the year and a return many would have taken. The ASX 200, of course, has underperformed many other developed markets, but that is to be expected when the Aussie banks have lacked a strong upside catalyst this year and the financial sector is lower by 0.5% this year, although is up 7% if you had reinvest all dividends and subsequently look at the total return. We also know that many with a more international mandate will use the ASX 200 as a vehicle for yield, and with that in mind one can look at the Aussie index returning 13% on a total return basis and then things suddenly look more appealing. Either way, the returns this year have exceeded what was expected in late 2016, or hopefully investors' super should be somewhat larger than 2016. For energy, I mentioned energy and that it was the outperformer in the US. But we should be cognizant that the daily chart of US crude and Brent are worth putting on the radar, as both look fairly bullish. Brent crude especially looks set to test and perhaps break the ceiling that has been in place since early November, so a close in the coming sessions through $65 would suggest a resumption of the bullish trend, and it feels as though equity traders are prepositioning for that. Copper has also been well traded of late, and this is also not far off year-to-date highs and looks bullish too. While in the bulks we can see rebar futures plus 2.1%, which has put upside pressure in iron ore futures too.